Hello and welcome to Financial Intelligence. In this video, I want to talk about the potential double dipping that could happen in your 401k account when it comes to management fees and capital gain taxes. If you are investing in funds of funds such as target date funds in your 401k account, it is very likely that you are being charged twice. Funds of funds are mutual funds that invest in other mutual funds. If you like the type of content that I provide, subscribe to this channel and also don't forget to like this video and hit the notification bell so that you don't miss any of my future videos. In the first part of this video, I'm going to discuss what funds of funds are. In the second part, I'm going to show you that most target date funds are actually funds of funds. And in the third part, I'm going to show you how you can determine if your 401k provider is double dipping on management fees. Part 1, funds of funds. A fund of funds, also known as a multi-manager investment, is a pooled investment fund that invests in other types of funds. Simply put, funds of funds are mutual funds that invest in other mutual funds. This definition would make more sense if we look at the contrast between regular mutual funds and funds of funds. Traditional mutual funds collect money from individuals and invest that money into a collection of securities such as stocks and bonds, but never in other mutual funds. In contrast, funds of funds collect money from individuals and invest in other mutual funds or exchange-traded funds rather than investing directly in bonds and stocks. The advantage of funds is that they enable massive diversification with fewer risks compared to directly investing in securities or even in individual funds. Most professional money managers are experienced in certain types of assets and run funds that are specialized in their particular field. Investing in a fund of funds enables investors to benefit from the expertise of multiple money managers who are each specialized in managing funds with different types of assets. The disadvantage of funds is that their investment fees are typically higher than traditional investment funds. Higher fees come from the compounding of fees on top of fees. Similar to most traditional mutual funds, a fund of funds carries annual operating costs as well as management fees. Therefore, funds of funds investors are essentially paying double because the underlying funds in the funds of funds all have their own annual costs and fees. Moreover, each fund pays capital gain taxes when they rebalance their assets under management. Therefore, there is also potential for double taxation when you invest in funds of funds. Part 2, target date funds. Target date funds are mutual funds or exchange-traded funds structured to grow assets for individuals who plan to retire at a certain time in the future, hence the name target date. For example, if you are planning to retire in 2040, you could invest in 2040 target date funds, which are designed to meet the capital needs of investors who want to retire in that year. Target date funds usually adopt a more aggressive investing approach the further they are from their target date. This means that a target date fund's portfolio mix of assets and degree of risk become more conservative as it approaches its objective target date. Target date funds are the most common default investment option offered by 401k providers. Employees who are automatically enrolled in a 401k plan are invested in the default investment option unless they make modification to the default settings. What this means is that if you have a 401k account and you have not selected a fund other than the default option, you are most likely invested in a target date fund. According to recent statistics, more than 50% of people who invest in 401k never change their default settings on their accounts. The bottom line is that target date funds are the default investment option for 401k accounts. However, target date funds can be expensive. There are technically funds of funds, a fund that invests in other mutual funds or ETFs, which means you have to pay the management fees of those underlying funds as well as the fees of the target date fund you are investing in. Part 3, double dipping, fees and taxes. This brings us to the main topic of this video. Most funds of funds charge higher management fees and pay higher capital gain taxes. If you are considering investing in funds of funds, you should be cognizant of these drawbacks. For instance, if you are using your 401k default options, you are very likely investing in target date funds, which are funds of funds. Therefore, you should also double check the management fees of your target date funds. The important point to note here is that not all financial institutions double dip on management fees. For instance, Vanguard has explicitly announced that they will waive the second layer of management fees for funds of funds. However, this does not address the potential for double taxation on these funds. Now the question is, how can we easily discern between funds of funds, particularly target date funds, to make sure that we do not invest in ones with crazy high management fees? The answer is that we can use Morningstar's website to research expense ratios of these funds. Morningstar has come up with a rating methodology for mutual funds and ETFs that is widely used in the industry. These ratings reflect Morningstar analysts' forward-looking analysis of funds, taking into account their management fees expressed on a 5-tier scale with 3 positive ratings of gold, silver, and bronze, a neutral rating, and a negative rating. Moreover, Morningstar has a dedicated page to target date funds where they stack rank various plans offered by different companies. You can take a look at this page and see how the plans offered by your 401k provider ranks against competitors. If your plan has higher management fees than the average, you should change your plan immediately to an alternative low-cost fund. I will add the link to Morningstar's page so that you can check it out yourself. I hope that you liked this video. If you have any suggestions or recommendations, please add them in the comment section below. And don't forget to subscribe to this channel and like this video, and also hit the notification bell so that you don't miss any of my future videos. Thank you and take care.